Okay, so I want to walk you through a subject to transaction that Medium Wave Dave and I just recently completed in Trussville, Alabama. The address here, 169 Glen Cross Circle in Trussville, Alabama. This was a 4-bed, 3-bath house, 1,520 square feet, and this was a auction property. This lead was brought to us by another Subto student. They were not in the Birmingham market and asked if we'd be interested in taking this one over and seeing if we could help the seller out and stop their auction and possibly take the property over subject to. Went and met with the seller and started going over the details, finding out exactly what the numbers were going to look like, what his situation was, and two things found out right away is first, they were $31,000 in arrears with their auction coming up in 2 weeks. And the second thing was the seller, while they did not want to lose the house, obviously, they didn't want to ruin their credit. What was most obvious to me was the seller's desire to allow his wife to continue to hang out with her friends and be a part of the community without the stigma of having her house foreclosed on. That was very powerful when I was having that conversation with the seller. You hear a lot about sellers having pride of ownership. Well, there's also just pride in knowing that you didn't foreclose on a house, and you don't have to have your friends look at you any differently. Not that your friends necessarily would, but that was a huge concern for this seller. He wanted his wife to be able to go about her life and not have that stigma on her. So it was powerful, very emotional conversation I was having with the seller. We looked at the house, walked through the numbers, and it seemed like it was going to make sense. So at that point, once I had a basic idea of what the numbers looked like, I basically let the seller know odds are we're going to be good on this. Unless something crazy pops up when we go and pull title, the numbers add up. We should be able to stop your auction, and we'll get to work as long as we have some paperwork to get filled out. Give us the ability to go and try and stop this auction for you, but we'll get to work as long as you want us to go ahead and get to work. So obviously he did. And we went and we got started on this thing. So let's take a look at the numbers and walk through exactly what this looks like. $187,000 was their mortgage that we took over subject to. They had $31,000 in arrears, which had to be paid to stop the auction. Paid a transaction coordinator $800. Closing cost us about $2,500. We had a $5,000 assignment fee, which was paid to that other sub-2 student who brought us the deal. After we pulled title, we found a $6,800 sewer lien that we did not know about. Now, this took a relatively thin deal and it made it very thin. We did not expect this lien to come up, but at this point, we were committed to doing everything we could to help this seller and stop this foreclosure. And it was still okay. We were still going to be slightly profitable on the deal. So we decided to go ahead and keep moving forward. The extension was requested by the trustee. For those of you who don't know who the trustees are, the trustee is basically a law firm that the bank appoints to handle the foreclosure. They're a glorified collection agency. And as I mentioned before, they are not exactly pleasant to deal with right now. We had 2 weeks to stop this auction. So we immediately filed for the extension with the trustee, and they told us everything's probably going to be fine. We'll get back to you. You have 2 weeks, plenty of time for us to take care of everything. We'll let you know once the extension's approved. A week goes by. They still haven't given us the answer. Now, obviously, people are starting to get a little bit panicked because auction's on Thursday, and we need an answer. So our transaction coordinator, who we paid to handle this entire process for us, is calling this trustee multiple times a day, 5, 10 times per day, to try and get an answer. No answer. They keep deferring to other people, other departments. We needed to have an answer by Wednesday at 3 p.m. Eastern time. 4 p.m. Eastern time. We're Central, so it's 3 p.m. Central. We finally get an answer 5 minutes after the deadline, and they tell us we're not approving the extension. So now, luckily, we had planned for them not approving the extension. Something I like to tell sellers all the time is always have more than one exit strategy when you're going through this process. If you have someone a seller you're dealing with that is going through a loan mod, have a plan B, because the banks take forever to tell you whether your loan mod is approved. And if they don't approve your loan mod or they don't approve your extension and you made no alternative plans, you're going to be out of time and you're going to lose the property. So we made alternative plans. Plan B for us was that we were going to pay the $31,000 outside of escrow. And because we planned for this, our lawyer drew up paperwork which was signed by the sellers, which put a lien on the property. So if for some reason the sellers backed out or the deal didn't go through, we didn't lose our $31,000. We would then have a lien on the property, and the seller couldn't go and sell the property. Yes, our $31,000 could have been tied up, but at least we wouldn't have lost it. Now, do I recommend you do that? Not necessarily. We were in a position where I had a good enough relationship with the seller that I trusted they weren't going to do anything to compromise the deal. Also, in our business where we were at the time, it wasn't our last $31,000. If we lost it, well, yeah, it would have sucked. It wasn't our last $31,000 and it wasn't going to break the company. So it was a risk we were willing to take to go ahead and get this deal on to the next phase. So we have that plan in place. The trustee tells us with 5 minutes after the deadline, they're not approving it. So I then rush off to the bank. I go to Regions Bank, which is where we have our business account, and I wire the $31,000 and change, whatever the exact payoff was or the exact arrears were. I get that wired in, and then the trustee will not tell us if they're going to stop the foreclosure or not. They acknowledge that they received the wire. They see the wire is there, but they still have not told us that the foreclosure is stopped. So at this point, I have a debate. I have a long conversation with Dave. I have a conversation with my wife about how to handle this situation. Do I allow the sellers to just have a peaceful night and let them continue to think that everything is handled, or do I tell them the entire story and there's a chance this is not done? There's a chance that tomorrow you're still going to lose your house because the trustee has not signed off on this yet. So obviously the right thing to do was to talk to the seller and explain exactly what was going on. And while we felt like the trustee, even though they were dragging their feet, they would ultimately stop the foreclosure, we had no guarantee of that. So I had the conversation. I tried to ease their concerns as much as possible, but it was not over. So next morning, we find out about 8 a.m. that the foreclosure was stopped. And I had another very emotional call with the seller. Called him up, let him know, hey, you're good. This is over. It's done. You're caught up. Your mortgage is current. $31,000 has been paid. Your auction is over. It's been stopped. Now we will just continue the process of closing on the property. For the second time in this transaction, The seller, 47-year-old grown man, cried to me on the phone, which is pretty powerful. I mean, it kind of just reminds you of why we do this and how powerful what we're doing is. We are truly helping people when we can stop foreclosures and we can get them out of one of the most stressful times in their entire life. So that was on March 17th that the auction was stopped, and we were not even close to closing this thing yet. So on March 17th, we go and we continue to have, waiting for title to come back, and we did not have all the liens cleaned up. Turned out, as I mentioned up here, we have a sewer lien of $6,800. There was a tax lien. I think there might have been more than one tax lien. There was an HOA lien. Turns out there was also a credit card that was on there that needed to get cleaned up. Turned out, should be no surprise to anyone, the most difficult lien was the HOA. The HOA lien release dragged on until May 16th. We finally got the HOA lien released and closed on the property. So, 2 months after the original auction date, we finally closed on the property. So how did we actually close on this property? You see, we had about 47. So our entry fee adds up to be about $47,000 was our entry fee. So where did that come from? I already told you we paid $31,000 out of our own bank account to stop the foreclosure. That was not the plan going into this. As you build your business and as you buy more and more properties, you cannot continue to use your own capital. I don't care how much money you got in the bank. I don't care how big you are. Eventually, you will run out of money if you keep buying houses. So we try not to use our own capital. So what did we do? We used a private lender on this deal. Private lender on this deal brought in $60,000. So the $60,000 paid for our $47,000 entry fee. We also had some anticipated rehab costs, so that's why we had $13,000 of additional in there, because that was already factored in for money for the rehab. We were going to just do a relatively light rehab, paint, clean up some floors, clean the house up, do the minimal we needed to do, and sell it at a discount to the market. So where did our private lender come from? This private lender came from another Sub-2 student. Sub-2 student referred this lender to us. And rather than just saying, hey, thank you, that was really nice of you to refer your lender to us, what we do in our business, we pay the person who refers the lender to us a 2% referral fee. So the person that brought this lender to us got $1,200 at the closing table. He was a line item on the HUD. It said right on the HUD, referral fee to our Sub-2 student that brought the deal, or brought the lender, $1,200. So then we've got all this taken care of. We've got the private money lined up. We closed on the deal. We go in, paint the house, clean it up. The entire time I'm in and out of this house when I'm meeting with the seller. And after we got the house and I started cleaning it up, there's something that was really bothering me about the house. As I said in the very beginning, it was listed as 1,520 square feet. It's a 3-bedroom house with 2 stories. There's a loft upstairs and a full bathroom up there. and it felt much larger than 1,500 square feet. But I couldn't figure out why it was showing that. It was in county records, it was showing 1520. On Zillow, it was showing 1520. So I measure the outside of the house. That's how you get the square footage of a house. You measure the outside of the house and then subtract the garage. Turns out the first floor was 1520. The upstairs was not counted in the square footage when they recorded the tax records. When the house was initially built, for some reason the builder left that square footage off of the county records. It's heated, it's cooled. There's a full bathroom up there. It's actual livable space. So that square footage actually brought my house up to 1,894 square feet. This is really, really important because in the 2 months it took us to close this deal, we actually got a new sold comp in the neighborhood, which was a 4.3, 1,850 square feet. Basically the same size as our property. It sold for $345,000. Now, we expected an ARV on this property of $285 when we went into this deal. Now, all of a sudden, that $285 ARV was based on the house being 1,500 square feet. Now that we know it's closer to 1,900 square feet, our ARV is now $345,000 based on an exact comp, same floor plan and everything. Exact comp selling for $345,000 2 streets over inside of our neighborhood. And they even had a smaller property than we did. We had a better yard. Now they were in perfect move-in turnkey condition. Our house was less than perfect. So that being said, we had planned all along to sell our house slightly below market value just for the speed of the transaction, find as many buyers as fast as possible, and get the highest profit with the best speed possible. So what we chose to do after it was done being cleaned up, we chose to list the property at $310,000. First weekend, we listed it actually with a flat fee service for sale by owner, so it was on the MLS. First weekend it was listed. We had a few showings, and on Monday we received an offer of $320,000. Now, a lot of this is the product of the market that we happen to be in the spring, right? We're not in that current market today, where we're testing new highs and then we're getting multiple offers and we're getting people offering over asking price. But that's the market we were in at the time. So we did receive an offer of $320,000 and we accepted that offer. They did their inspection, and after inspection they came back and said we would like a $10,000 reduction in price because you need a new air conditioner. So I went back to them and said, hey, I'm really sorry, but we were already priced. The offer price that we accepted was already $25,000 below what we feel the house is worth, and that's already been factored in. As a good faith gesture to your buyers, we will give them $2,500, and they accepted that. So we took a $2,500 reduction on the property, and we closed on July 6th, and we received, after everything was paid, our lenders were paid back, this actually went in our bank account, $54,902 total profit on this deal. So what was going to be a Subto auction property, relatively straightforward deal that was not going to be all that profitable, turned into a pretty interesting deal that saved a seller from going to foreclosure, netted us $54,000, got a sub-2 student a $5,000 assignment fee, got us a private lender, and got another sub-2 student a 2% referral fee, which was $1,200 for bringing us a lender. All in all, it was a pretty cool deal. We have a bunch of deals that we're working on that are very similar to this, and we're using private money lenders on all of them. And we are continuing, obviously, to pay that 2% referral fee for anybody that brings us a lender. So if you have any questions on this deal or any deals like this, feel free to hit up myself or Medium Wave Dave. Thanks, guys.